Welcome, everybody. This podcast is going to talk about how alternative data can open up financial opportunities for credit invisibles in the Middle East. This is actually a follow-up to a webinar that we recently did, which was about tapping into the Middle East youth market. And based on the responses in that webinar, we were asked to follow up with this topic talking about credit invisibles. So today we have a panel who's going to help us talk through that in the Middle East. And first, I'd like to introduce our panelists before we jump into the discussion. The first panelist today will be Riaz Jassat. He's the Chief Commercial Officer of Qarar. And for all things Middle East, whether it be in the GCC countries, KSA, etc., Riaz is your guy for figuring out how to take alternative data, to take algorithms, scores, and turn them into actionable insights and credit decisions. Our other panelist is Tarun Kumar Kalra. He's the SVP and head of Global Sales for Credolab. And he is here to help us understand how we can use alternative data in a way that both grows the business and, of course, mitigates risk at the same time. With that, I'd first like to just do a quick recap on the recent webinar, which you can always go find the recordings through our social media of Qarar, Credolab, or BankersLab. And in both those podcasts, the webcast and today's podcast, I'll be your moderator, Michelle Katics, co-founder and CEO of BankersLab. All the things that Riaz and Tarun do, we simulate them so that you can practice in a virtual environment before you go and try to do this stuff in real life. So with that, I'd like to just hear from the panelists. Let's recap our thoughts on what we talked about in the recent webinar on alternative data. And if I could just start with you, Tarun, what comes to mind as some key points we talked about in terms of how we can use that alternative data in the Middle East?
Yeah, I think it's very good to recap that and also probably add a few points. What really is working for the Middle East region at the moment is their openness to adopt these new technologies, their ability to use and understand the importance of data, and the openness to look at alternate data, how it could complement their existing decision-making time frame. And this is extremely crucial in the current scenario where there is a new segment of borrowers that are looking to consume financial services. Embedded finance is now a common word that is mostly used in that market as well. So I think it's all aligning in well from the Middle East perspective, their readiness, their openness, and the need for a solution like this around alternate data to really harness this power.
Yeah, thanks for that summary. I think, Tarun, a few things you said there I want to call out. One is the concept of embedded finance. If any of you out there listening to this podcast don't have a good understanding yet of what it is or trying to explore that, reach out to any of us because this is kind of our lives these days. And we spend a lot of time on this. And what is embedded finance? It's really doing the thing you set out to do as the consumer without thinking about the finance part. So when you call an Uber, you just want to go home. You want to get a car and go home. You're not trying to make a credit card payment. That wasn't what you set out to do. So the payment is done almost invisibly through the app. Or, nobody woke up saying, I want to have a mortgage. They just want to buy a house. So we try to make those experiences seamless, and the more data sources we can use to create that straight through processing or automated decisioning, it makes it smoother for the customer. So I think the embedded finance piece is a very important element. And with that, I turn to you, Riaz, because we talked a lot about automating these decisions, et cetera, as we go through that. So what else comes to your mind in terms of the last webinar and what we talked about with these new automated credit decisions?
It's if you have to look at any sort of banking or lending or finance that you'd like to do, what your customers are looking for is they are looking for simplicity. They are looking for no fine print. They are looking for something that is digital, something that they can trust, something that is transparent, and open without any hidden clauses. And to be able to have the seamless journey that all of our customers are looking for, I mean, we have to have systems in place. We have to have all our APIs, our systems, our integrations in place. So those have to be there. We have to have data and analytics. So we've got to look at all different sources of data that we could get our hands on. How can we use this data and turn this data into insights? And we've got to have sort of policies and procedures that's going to govern our lending program. And I think once we've got all of these three sort of foundational pillars in place, together with the trust and the transparency and the simplicity, it turns into a successful a USP or a successful product for the end consumer.
Yeah, thank you for that. I'm going to come back to that automation piece in a few minutes. But the other key point, aside from the data and the automation we talked about, were the demographics in the Middle East. And that really strongly links to today's topic about the credit invisibles. Riaz, we talked about the really quite stunning demographics that we do see in the Middle East, and that most of the population is under 25. And that really means we have different user behaviors, user preferences, etc. So Riaz, do you have any guidance for us to think about that Middle East credit population?
Absolutely. I think if we have to look at the Middle East and probably any other sort of emerging market or frontier market out there, right? I mean, just let's focus on this Middle East region. You'll find that we could sort of split this invisible market into various segments. So one segment would be the youth market that you touched on. There's such a massive youth population in the region. I mean, some of the statistics I'm reading, like in Saudi Arabia, where just under 70% of the population is under 30 years old, etc. Right? So that's a segment that is going to fuel a lot of growth in the next 5 to 10 years. I know currently it might not seem that attractive to a lot of lenders. However, it's a segment that requires focus. Something else that, a sort of second segment that's unique to, I'd say, the Middle East to a degree, where you have a very high expat population. So it's a very transient population. If you look at the UAE, Dubai specifically, 90% of the population are foreigners. Right? And this population is moving in and out. And any newcomer that comes into the Middle East or into Dubai is essentially credit invisible to any of the lenders based here. And for them, for the lenders to be able to grant credit, it's actually quite a risk that they are taking because they have very little to work on. So that's another segment that we can look at on how alternate data will assist this credit invisible. And I guess the third segment, which is, spreads wider than just the Middle East, is this previously unbanked or the unbanked population. There's a lot of drive from governments and institutions for financial inclusion. Central banks are really pushing this, and there's a lot of effort being put onto getting these people banked, getting them onto electronic payments, moving away from cash, etc. And if you have to look at this wave, the last part of it is the lending part. And that's where the alternate data is going to provide a significant uplift to any lender that wants to start doing lending to the previously unbanked population. And a lot of this drive is actually coming through mobile. Right, because you got to try and shorten that or remove that distance obstacle from this unbanked population. So everything's going digital. Payments are going mobile. If you look at some countries, mobile payments are, they've seen astronomical growth over the last decade. Right, so all of these various segments, if you start looking at them individually, you'll find that the common thing is the topic that we spoke about in our webinar, and that all of them are mobile savvy, right? So whether it's the unbanked population, whether it's the youth, whether it's its expatriates coming into the region, all of them have this mobile data that we could capitalize on and classify this as an alternate source of data to help make better decisions to start including them into the banking sector.
Yeah, thank you for that. I think let's go to a comment that you just made that some lenders may think that these populations are not attractive or not appealing because they don't fit in with their historical perceptions of borrowers, especially given the historical product structures and product setups that we have. So if I could ask both of you guys to go through a thought experiment. Imagine I'm an incumbent lender in the Middle East and I have traditional credit products and a traditional lending base. But you convinced me. I want to try to get into this credit invisible population. Let's say the young population, for example, right?
Yeah.
But at the moment, I mainly access credit bureau data, right? Which is the opposite of credit invisible. I think when we say credit invisible, we mean they wouldn't have a credit bureau. How would I go about it? What steps would I take to get from here to actually, let's say I want to create a new product or, a new product offering, new channel, let's say for the young population that are, quote, credit invisibles. How would I tackle that?
So let me start. And then I'll hand over to Tarun. The thing is, it's got to be a no-fuss approach to banking. I want to be able to, from my device, 24/7, be able to, in 5 or 6 clicks, go through the entire journey of getting myself verified, getting my account opened, and getting my virtual credit card issued to me. Right. So I think what a lot of these legacy banks have is they don't. How can I word this in a very diplomatically correct way? All right. So
it's a safe space. It's a safe space here, Riaz.
Right. So their journeys are not easily geared toward this type of lending, and a lot of them are making significant effort in getting there. Right. So I think what you need to think about is making sure that I can have from my first interaction on the app to my final loan or credit card being ready, in 7 to 8 clicks, I should be done without having to go to a branch, pull this document, get that verified, etc., etc. So this entire journey needs to be redefined in terms of how I do lending.
Yes, we didn't script this. We didn't plan in advance, but I want to thank you for that answer because, I always feel like there's only one way to go with these situations is to go back and rebuild the customer experience. Start there. So I think,
absolutely.
I think for some people, those words just sound vague. They don't know what that means. So when we say you have to reimagine and redo your whole customer experience, I think sometimes it's hard for people to imagine what that means or what it looks like. So I think your description that you just gave was exactly that, right? Rethink it. The customer needs to be able to pick up their phone and accomplish this thing in 5-6 clicks. Compare that to how it's currently done. So I think that's absolutely a great starting place for an institution because there are some fantastic fintech UX, user experience and customer experience expertise out there. And, you can throw them at this problem. And then once you have a customer experience, then we turn our attention to you, Sir Tarun. Then what do? I suppose I need to do something with the data, don't I?
Yeah. So, I think I would also want to touch upon a point I think briefly I touched upon in the webinar. There are 2 segments of people who are looking to consume finance and lending in its current shape and form. One is the one where Riaz very accurately articulated. They are looking at an amazing customer journey, minimum number of clicks. I want my services to the best frictionless environment. Then there is one segment which is credit deprived. It is credit hungry. It is credit excluded. They want a good user experience. They don't mind instead of 8, you take 10 clicks. They don't mind if you take some additional data of theirs with the hope that they would get credit. They are ready to click on it. Okay, I'm ready to share more information about my behavioral patterns from my smartphone in case it helps you to assess me better because they know they are financially excluded. Mm-hmm. In the webinar, we also touched upon women entrepreneurs who are in need of credit, but they are being excluded. Are they looking for a good customer experience? Yes. But what they're looking for is credit. So while we need to invest on the user experience and everything, that's actually a must. But what this other segment is looking for, ready to share their additional data. And that is where companies like Credolab come in, because we say we could possibly make sense of that behavioral smartphone usage pattern data, which you consent to share with us. And we could come up with scores and algorithms which would let the lender know what could be the likelihood of receiving the money back. The traditional ways have always focused on your ability to repay. In this new segment, believe me, intent is an equally important aspect, and that's where we step in. Now, would you ever give someone a loan because they have the right intent and no ability? Of course not. So ability and intent need to coexist. They need to balance. And this is where I think alternative database scoring is here to stay for the longer run, because it just complements the existing traditional sources and is solving a real life use case and a problem.
So let's say I'll stay in my shoes of an incumbent lender, and I'll be skeptical. I'll be like, oh, I don't have a credit bureau data. How can I possibly do this? Give us more flavor of how that data works for you. I mean, did you just look at my phone and see I have a bunch of gambling apps and determine that I'm probably I don't have the intent to repay? I mean, give us, I think people are always curious just to hear more about that data and how it really works.
Yeah, you make a good point. If you have a gambling app on the phone, there are two ways to look at it. One is if there are unethical SDKs on your phone or on the app, they would probably know are you winning or losing in gambling because they track you in the app. The Credolab model is that I would know you have 2 gambling apps, 5 gaming apps, 2 dating apps, and 10 banking apps. But what are your account balances? Whom are you dating? How much did you lose? I don't know. I will just know that is your behavior. What we then do is to make sure we analyze this behavior against your cohort in that market. And if everybody who pays back their loan also seem to have more gambling app on the phone, then it's not a discriminatory feature. It doesn't help me understand who would be good, who would be bad. But yes, someone who has a lot of gaming apps, less number of banking apps, tends to not store many contacts for more than 30 days in the phone. Oh, that could become a pattern. But just having a gambling app on the phone doesn't mean you would default on your loan. So it's important to build combinations of these attributes and assess and evaluate them against the behavior patterns demonstrated by defaulters, but not by the good ones. So if anything is spread commonly across all customers, it is not a bad thing. It doesn't help me differentiate whether you would be good or bad. So that's how we build these models in a very simplistic way. We suss out and analyze those unique behavior patterns and combinations that differentiate a bad customer from a good customer. And as we keep getting more performance data, the algorithms and the models get more refined and we get more accurate on our ability to predict the outcome.
So Tarun, if you're doing this type of modeling and you're able to predict more about the willingness to repay, what are typical data sources that you would recommend we link this data with to get an angle on the ability to repay?
Yeah. So I think there are many data sources out there, and that is why we touched upon in the webinar that alternate data is not a new thing. There is wallet spend data, there's utility bill payment data, there's telco data. So each of those, there was earlier, psychometric data. Nobody talks about it now because it lost its relevance. But what is very important to see the timeline of alternate data sources is they have a spike in their relevance, and then they fade out till another source of data becomes very predictive. Of late, the last few years and for the next few years, smartphone-based behavioral data has become the most important source because they say if there's anyone who knows you the most, that's your smartphone. All of a sudden, all about in there is becoming more and more predictive. However, telco data, utility bill payment data, and your e-wallet or wallet spend data is as important when combined with this score to get a holistic view.
Oh, thanks for that guidance. So for example, then of course I would go, okay, thanks, Tarun. Now I got to go back to Riaz. Okay, Riaz. So I've got his alternative data coming from the phone. You can help me automate it, but there are probably some partnerships I need to set up to get that data. So maybe if I'm the incumbent, I need to partner or set up an API to a payment wallet or something like that. So Riaz, now I'm back on your doorstep. How do I pull everything together and link that ability, willingness to repay data kind of in this automated API-driven environment?
Yeah, so I think it's, first of all, super important to understand your customer journey, because there is no one size fits all. Like Tarun leaned towards, you've got your youth, they want 7 or 8 clicks. You've got this other unbanked or the deprived population, they okay with 10 to 12 clicks, etc. So there's no one size fits all. So we need to understand our segment. We need to understand who we're lending to and what their expectations are. And I think once we have that, from a system perspective, it's relatively straightforward to be able to, I mean, everyone's got APIs now. You speak to most government entities and ministries, and etc. All of them have APIs available, right? I think where it comes in is, in this customer journey, where is the best place to start executing these APIs? What data sources from these APIs are important for me from a credit decisioning perspective? So we need to understand the data that's coming through. You know, from a credit decisioning perspective, we need data that is going to be stable. We need data that is going to be consistent. And we need data that we can analyze over time, so that, you know, with that old saying of past is representative of the future. So we need some sort of stability. We need data in electronic and readable format so that we could use this and turn it into actionable insights. And everything, I mean, there's no immediate answer to everything. It's all about taking the data, learning from it, and every year going through this champion challenger process, constantly challenging, enhancing, looking at new data sources to be able to automate this lending decision, so that we could have your no-fuss banking in a matter of seconds. So there are systems available. You need a good rules and decision engine that, as an organization, allows you to bring in new data sources, that allows you as a business user to be in control of your parameters, to be in control of your credit decisioning, your scoring, your risk assessment, your risk-based pricing, your affordability, your limit calculations, etc. So having the right platforms in place in the beginning is paramount to having a sort of dynamic customer journey that I can adjust as per my customer needs going forward. It's a reliance, or it's removing the reliance from IT and putting the reliance into the business users. And I mean, there are systems out there that will allow you to do this. And that's exactly what we help our organizations with, our clients with.
Got it. So then they're left to redefine the customer experience. I think that piece is actually not so easy. And when I say that, I think, you know, in our workshops when we're working with people on how to use alternative data, I think you guys made very important comments about the population. Each population is so different. There's no one size fits all. And so, for example, you're not going to throw this type of alternative data at mortgage applications, because they're not going to be applying for the mortgage if they're credit invisible. They need to take the first couple steps before that up the ladder, right? So the first is to find the right suitable population. And then I think redefining some of your product offerings. So, for example, starting out with a really small credit offer, and then let that person keep repaying and keep moving them up the value chain very quickly and dynamically. So Riaz, I think that's where the platforms empower you, because you can set up a rule-based engine that ensures that, you know, people can get moved up that value chain pretty fast. So then you can be more flexible about your opening credit offer. You're not doing I'm going to give you this big loan for the next 3 years. You can start small and rethink how you make those offers.
Absolutely. And it's about understanding where your customer is in their life stage, right? And in their personal life journey. And as long as your product offering is matching or exceeding where they are in their life stage, it will always be attractive to them.
Well, yeah. And also with the current cloud-based automation and platforms, you know, the unit cost of additional credit applications should be much lower than it was historically, right? So historically, like, whoa, my cost of even processing this application is so high because I'm going to push around this stack of paper. I need to give a reasonably big sized loan. And some of those preconceived assumptions and notions about unit costs for credit, I think, have changed. And that really frees you up to make smaller loans. I mean, that's where sort of BNPL came from, that now we can give these very small, short duration loans, see the customer's behavior, and then, offer them another loan. So I think the change in the unit costs is an enabler for you to really rethink that customer journey and make a different offer.
Absolutely, you hit the nail on the head, right? So the smaller, the cheaper the unit cost, the smaller can be my finance amount. The greater is going to be the quantity, and it's going to be a larger segment that I'm going to be focusing on. Absolutely,
exactly. It's a different way of thinking. It's a different way of thinking about customers, etc. Tarun or Riaz, do you have any? I realize that time is flying already. But any inspirational examples that you've seen out there in the market? People, I'd love to hear, product, even tweaks to products that have been offered, use cases, ways that your data has been used, Tarun, that you think are kind of aspirational or inspirational or cool.
Sorry, Michelle, you would have to ask me that again. Sorry, I was distracted for a moment. Please go ahead. Sorry. Ask me.
I was just wondering about what examples come to mind that you've seen in terms of like using this type of alternative data, like product examples, any tweaks to products you've seen that are cool, like the lender was doing things in a different way that you think are good examples.
I think there have been a couple of clients we've had in Africa, and now we're looking at other places as well. They say it's very difficult to source clients. You acquire leads, and it's very easy to say, oh, you don't meet the cut, I'm going to reject you. I was talking to a few clients who said this with this solution, I will not say no to anybody. I would probably give them a loan for a shorter duration, lesser amount, at a higher interest rate. And I would let them know, hey, we don't know much about you. So I'm giving you that loan, but I'm charging you 2 percentage point extra. However, if we see a good behavior pattern from you, you could come back to the normal. So this way, they've been able to price and structure their products in a much better way, wherein they are understanding with higher interest rates, they are absorbing the higher cost of risk initially to test out, not saying no, because a good client lost is a client lost forever. So they give them lesser duration, see their payment patterns. And, there's some banks, not banks, I would say, there's some lenders we have seen just to understand the credit worthiness. They have said instead of monthly installment, yes, I could give you this, but can you move to fortnightly installment? So you could see early on if their patterns change. So these are the tweaks which are needed on the product side from a banking perspective. These changes need to be done in the core backend system. So what I like is solutions like Credolab, while they are very niche and small in their own space, they are making the lenders think very differently how to package and structure the products to the end clients.
No, I think that it is a very new way of thinking to really rethink that credit proposition. And I think, so for example, we just did a digital small business lending workshop, and, it was comprised of various people from that unit, but a lot of credit people. And the first exercise we do is around the customer experience, defining the customer personas to start there. And I guess I've been in the industry long enough. I'm sure we didn't used to think this way. And I like your nice example there of changing the payment frequency. It's a simple thing, but it can be very powerful in order to really address customers' needs in a different way, to give them a different type of loan that suits them, and give the customer some choices on which payment date they want to make sure it's the day after their payday, for example. Let the consumer make some choices. I think that's really important. And that, I can't stress enough what we've seen out there, which is to really rethink the product structure. But the second thing is to rethink your partnership model as a lender. So whether you're partnering with a wallet or partnering with a shopping platform, something that really gives you, to your point, Tarun, the lender's challenge is sourcing the customers. Many fintechs have struggled with the cost to acquire customers very high and sourcing them. So even if they're credit needy, they may still be difficult to source. So I think some of those partnership models could be quite helpful as you redefine your lending product. So I know we should wrap up soon, although every time we get going, guys, we can usually go for a lot longer. In this type of podcast, I think, any type of pro tips, things to think about, really practical steps people can take to address this credit invisible population, to leverage the new available data from, say, phones. What kind of guidance would you guys give? Give us some pro tips, insider tips, hacks, life hacks, however you want to call it. Where do people start? What can they do?
Yeah, so I'll just take a quick tab at it, which is probably one of our USPs as well. While you have the temptation of trying to understand more about your borrowers, keep an eye always on doing things the ethical way, the right way, making sure only permission consented data is being used. No personal data is ever used or misused. So that's very important. So I think these would be the qualifying criteria for any lender who wishes to use this very predictive source of data. It comes with its own share of temptations to do more than what you are needed to do. So be careful, because while data is predictive and powerful, you have to be very you need to have integrity and ethics around that as well. So that would be my suggestion to any lender listening to this podcast while evaluating solutions like these.
Oh, thank you for that. And how about you, Riaz? What kind of guidance would you provide?
Yeah, I'd say when redefining these customer journeys and re-looking at your systems and the solutions that you have, always try and procure solutions that are configurable, follow a zero code approach, that are geared towards lending, removes reliance on IT for changes, allows for dynamic control of your lending parameters, and essentially leaves the control in the hands of business users. I think those are all key components to cater to this ever-changing, ever-demanding customer base that we're going to be focusing on.
Absolutely, and what a great opportunity, because we have more data available these days. We have this large young population coming into the system, and certainly an opportunity for lenders to hopefully safely grow. They can safely grow into that population if done properly. So with that, we can wrap up. I just want to thank you guys for coming in again after our webinar. And just a reminder to all the listeners out there, we do have a recording of the webinar that we did recently, tapping into the Middle East youth market. And the thing in that webinar, if you listen to it, which is interesting, we also had an additional panelist, Halima Iqbal, from a company called Iran, and they talked through a use case and case study of how they are using this data live for mainly a female population in Pakistan. So don't miss that. And of course, you're always welcome to contact us for any further questions. We'd love to sit, since we're not always at conferences as much these days, just drop us a line. And a reminder, our panelists were from Qarar, Riaz Jassat, who's the Chief Commercial Officer, and I'm sure you'll find all his details in the show notes. And finally, Tarun Kumar Kalra, the SVP of Global Sales from Credolab. These two gentlemen can certainly help you guys figure out how to put the pieces together to rethink your product offerings and go to this audience. And of course, myself, Michelle Katics, co-founder and CEO of BankersLab, we simulate it. So we put people in virtual lending worlds, which mimic what you would see in real life. So we can, do thought experiments, game it out, test and learn, and then you can go implement those strategies in the real world with the help of these gentlemen. So with that, thank you so much. And thank you to the folks at Qarar and Credolab for organizing this, and to everybody behind the scenes for their organization and support to make this happen.